Hello, everybody. Welcome to Finimize Live with IG. We will get started in just a few seconds. Please say hi in the chat. Let us know where you are across the UK, or if you're dialing in from abroad. We will start very soon. Just watching those numbers tick up. I don't want anyone to miss anything. Okay, let's get started with the intro as people roll in. As I said, welcome to another Finimize Live. My name's Carl. I'm the VP of Content here at Finimize, and I'm delighted to host today's event in partnership with IG on spread betting versus CFDs, how to trade tax-free. Bit of housekeeping, as always. Please let us know where you are. Say hi in the chat. Make sure you flick to all attendees so everyone can see your message. A poll will pop up once we get started. Again, it'd be great just so we know what your level of experience is with CFDs and spread betting so we can tailor the conversation in a way that is most helpful for you. And in terms of the format, Chris and I will talk for about 15 minutes, and then it's over to you guys with your questions direct to Chris. So to get your question answered, use the Q&A box in Zoom, not the chat box because we might miss it. If you see a question you're desperate to hear the answer to or that you wanted to ask yourself, just give it a thumbs up. We'll work through the most popular questions first because we'll probably have more questions than time. Okay, let's kick off. Delighted, as I mentioned, to be presenting this event in partnership with IG. IG, as you know, is a leading retail trading and investment platform, providing ambitious, self-directed individuals with the products, the tech, and the insights they need to access financial markets. And they've been doing that since 1974. They offer an easy-to-use platform, expert trade ideas, friendly support as standard. You can trade over 17,000 markets with spread bets and CFDs, which we're going to spend some time talking about today. Invest in thousands of global shares and ETFs, trade thousands of US listed equity options. And to help put you in the best possible position to succeed, IG provides an array of analytical tools and content, as well as educational resources, including IG Academy, all free of charge. Now you know who we're working with today. I'm delighted to introduce our guest, IG's Chief Market Analyst, Chris Beauchamp. Chris, hi, how are you?
Hi, Carl. I'm well, thanks. How are you?
Very well, thanks. Excited to get into today's conversation. Just to maybe level set the audience, Chris has been with IG since 2010. He's a regular commentator on press. He's been on TV more times than I can count, BBC, Sky News, you name it. And his background is in equity research and analysis. So he uses these skills to provide in-depth reports on stock market movements. And today, to dive into our topic. So maybe to set the scene a little bit, Chris, and to remind everyone why now is a really important time to be talking about spread betting. On October 30th, the UK increased capital gains tax. So for profit above £3,000 each tax year, you'll now pay 18% in capital gains tax if you're a basic rate taxpayer, which is up from 10%, and 24% if you're a higher rate taxpayer, up from 20%. That's why this is important, but maybe taking even more of a step back. Chris, what is spread betting? How is it different to CFDs?
Well, of course, both spread bets and CFDs are leverage products. So they're ways of accessing the market via leverage trading. The difference exists mainly because of the fact that spread betting in the UK is tax-free, and it's the only place in the world where that applies. So IG offers spread betting in the UK for UK customers, but if you're an international customer, if you live overseas, you would use our CFD trading. So this is a distinction that applies only for the UK. But with spread betting, you're it's more differs in the mechanics of the trading itself, really. Spread betting, you're looking at taking advantage of movements per point, and you can specify the position size you have on that. So, for example, if you say we're trading £1 per point on the FTSE 100, every time the FTSE 100 goes up 1 point, if you're long, you make £1. Whereas with CFDs, you're buying a set number of contracts. and and then you take the difference between the price movement when you've closed it as to when you've opened it, and that gives you your profit or loss. Whereas as I say, for spread betting, it's more the amount per point. There are some slight differences as well if you're holding your positions longer term. So for spread betting, we've got what's called daily funded bets, which are trades that are designed to last maybe up to about a month or so. And then if you're looking beyond that, you're using our forward bets, where some of the costs from the daily funded bet are rolled in, and so it's paying a slightly wider spread. That doesn't happen with CFDs. You're just paying for the one, because every spread bet needs to have an end point. There's slight differences in that, but generally it's the same principle. Really, you're using margin to trade the financial markets.
Okay, so if it's the same principle, I guess that begs the question, why is it tax advantaged in the UK? Why is it tax free?
It's a historical quirk more than anything else. When IG was first set up, because it is defined as gambling rather than trading, whereas CFDs are available to retail clients and to professional investors. So that's why you do then have to pay capital gains tax. And it just goes back into sort of when it was first started. IG was started as a way of trading on the movement of the gold price before it was easily available to trade, and it was expanded from there. So it's not we also have the note that of course tax laws can change, and there could be the possibility that they change that, but there's no sign of that at the moment. But that's really why you've got this slightly odd, I understand, distinction between the two for the UK.
Got you. Okay, so and you started to do this already, but maybe let's just take everyone on a bit of a journey through a spread bet. So let's pick up on your example. I want to buy the FTSE 100 on IG. How does it look if I buy the underlying index? What am I putting up? What am I getting? Versus a CFD, versus via a spread bet.
So if you're looking to buy the FTSE 100, of course, you can't. The FTSE 100 exists purely out of it's an index. You can't, as I'm sure most of your people know, it's you can't just ring up your broker and say I'd like to buy the FTSE 100. You'd have to say I'd like to buy it through a tracker, most obviously an ETF or a fund that invests in the entire FTSE 100. So you'd have to put down the full amount. So if you say I want to buy £1,000 worth of an ETF that tracks the FTSE 100, you'd have to put down the full amount. Whereas with CFDs and spread bets, you can trade that on margin. So for example, if you're a retail client, it tends to be around 5% of the overall position size. You'd have to put down from your account. So if you've got, say, £5,000 in your account, rather than putting down the whole amount of the £1,000, you'd put down 5% of that, so £50 on that. Or depending on your position size, of course, because you can go from, say, about 50p a point up to, well, very large amounts, really. Via CFD, it would be contracts. So you'd say, I'd like to buy 5 contracts of the FTSE 100, rather than specifying the position size. And that's how the difference works between the three.
And I guess on the one hand, it's putting up 5% versus the full amount is super cost effective. I guess what would be interesting to understand is how you see people using spread bets. So in that example, would I perhaps put up 5% rather than the full amount? Say I've got 5k in my account, would I put up 5% and buy into the position, or would I actually still put the whole 5k to work, as it were, and have that be my 5% position and actually have a much bigger exposure?
Yeah, but if you had 5,000 in your account, of course, you're trading on margin. So you have to have margin in your account left over from the trade you put on, because obviously if a trade moves again, when you put your trade on the FTSE 100, for example, you're saying I'd like to put on £1 per point. That usually uses up about, depending on where your stop goes, say £80, £100 of your 5,000. So in theory, you've got 4,900 left to trade with. But if the FTSE then drops 100 points, then you're not only using up you need the money to cover that loss, as well as the amount you've used up in the margin too. So when we talk to clients about trading and risk management, you're saying you don't want to use up all of that, because then you won't have any money to cover movements, positive or negative, in the thing you're trading.
Absolutely.
So it's the same thing applies with CFDs as well, because you're using up some of the account on margin, the rest is left for movements, for the movements in the actual market itself.
Absolutely. Okay. Just as a reminder to everybody watching, listening, please do pop any questions that you have into the Q&A box. We will come to them very shortly. And if you see a question you want answered, please upvote it so that we know to prioritize it. So a couple of follow-up questions just to sort of make sure everyone's on the same page here. Maybe starting with a more experienced investor, somebody who perhaps is trading CFDs and hasn't thought too much about spread betting. What's the beaten path in terms of pivoting some, all of those CFD bets into spread bets? How should they think about that?
If you're looking at opening a separate spread bet account, then it's something you can easily do through IG if you're an existing IG client, or you can, if you're new to IG, you simply go through the normal account opening process. It does take a little bit of time. It's rewarding to take some time just learning how it works in terms of trading at pounds per point, and also the differences, as I said at the beginning, between the daily funded bets and the CFDs. Both CFDs and daily funded bets, or DFBs as we call, sorry not to use too many three-letter acronyms, but have what they call an overnight funding charge if you hold a position after 10 p.m. That's a small amount, that's a very small amount that's debited from your account for holding the position overnight. With CFDs, that's regardless of whichever CFD you have. With a spread bet in the UK, that will apply for the daily funded bets. But if you're using what we call the forwards, where the costs are rolled in because you're holding them for a longer term, it's more cost effective to use those if you're, say, looking to hold the position for more than a month or so, really.
And maybe on the other side, if I'm a newer investor to spread betting, and maybe to what this is a genuine question, because I'm not sure if I remember, but IG used to have sort of demo accounts. Is that still a way?
Yes, we do have demo accounts that you can have for a time, and then also you can start with reduced bet sizes as well. And that's the key thing, especially if you are new. If you're a CFD trader, you're familiar with how margin and leverage works and how quickly things can swing around in markets. It's maybe not to rush in, but you're more comfortable than you would be if you're entirely new to this, and using those reduced bet sizes to get a sense. Once you've played around with the demo account, to use the reduced bet sizes in a live account to actually understand the advantages and disadvantages of leverage trading, i.e. that you can have profits and losses that can appear and disappear very quickly. And it's we've said this to a lot of clients. They come from having a demo account, they know how it works, so they've made money in their demo account, and they breeze into their live account thinking I'm good at this now, I know what I'm doing. And it's how interesting how feelings kick in and how different you feel once you're trading even with small amounts of real money. So if you're very new to the whole thing, take it very, very slowly, get those reduced bet sizes, and then you can really just experiment with how you feel when you're trading, because it is a different thing once you're watching a live trade going on 24 hours a day. Don't forget, of course, with spread bets and CFDs, they are 24-hour markets. They start at 10 p.m. on a Sunday, and they go all the way to 10 p.m. on a Friday, unless you're trading some of the markets that do run through the weekends. So you do have that element of the trade running all the time, unless you're trading shares, of course.
Cool. So we've mentioned leverage a few times. I'm going to assume that everybody listening and watching understands what leverage is and how it works. If you don't, please pop it in the Q&A and we will spend a bit more time on it. I don't want to leave anyone out. But coming back to that point on leverage, we have, I guess, in the past handful of years, heard stories and seen worrying examples where people do overextend themselves with leverage. Can we maybe spend a bit of time just explaining, I guess, the risk profile of a spread bet and how that works?
So when you're using spread bets and indeed CFDs, of course, because it's leverage trading, you're putting a small amount down to control a much larger amount. And so, for example, in our original example, the FTSE 100, if, as we saw today, really in markets, you had quite a swift drop in a number of stock markets, 100, 200 points. If you were £1 per point on those trades, you would have seen a £200 loss appear very, very quickly. Now, if you put down the full amount, you might be able to, if you're trading it not on leverage, then you would probably look at that in a more sanguine way, but clearly if you're trading on leverage, you've put down, say, £80 of your account in the margin, and you're also £200 down from the loss you've taken. So the risk profile and understanding how risk works is key. There's an iron rule in trading rather than investing, is that you should only really risk 2% of your account on any one trade. So that's why when we started with the example, we said we've got £5,000 on the account, 2% of that is £100 really. So we're looking just to take advantage of only putting us is putting down we put down the margin, but also saying if the position moves against me, because when if you close out the trade, you'd get that margin back. It would be you haven't lost it, but you would lose the loss that went with the position. So you're saying if this position moves against me, I don't want to lose more than £100 because I've still then got 98% left of my original 5,000. And that's the most important thing, is making sure that you manage your risk properly, because whether you're investing or trading with spread bets or CFDs or options or whatever, the most common pitfall for investors is not managing their losses properly, and they sit on their losses and they get bigger and bigger, and they take a much bigger loss than they should have done had they used a stop in the first place.
Absolutely. I think that and position sizing, I think those are the two.
Yeah, they go hand in hand, of course.
Yeah. Okay, I've got tons of questions that we can come back to around risk mitigation, around stop losses, tools, but I do want to start to get to some of those questions from our watching and listening audience. So I will start rattling through, and if we have some time at the end, I'll come back to one or two questions. But if there's anything you want to hear, Finimizers, please drop it in the Q&A box and we'll get to it as quickly as we can. Elwin is first up and asks, is spread betting in the UK completely tax-free, or are there exceptions?
It's completely tax-free. I think that there's always been a slight question if you were to do it professionally, but I think it's been tested that because it comes from professional gamblers who do sports betting, that it still applies as well. So there's no exceptions for that.
Second question here. Do we have the option to choose the margin level at this time of setting up the account?
If you become a professional investor, if you meet certain qualifying levels, then you could have a lower margin amount, so you can have larger position sizes. But the margin level is determined by IG, so it's usually about 5% for indices. It's 3.3%, I think it is, for FX, 20% for shares. It varies from market to market. So when you are trading, and the tables are there on the website, or they're there in each individual market, you can look up the information to see what the margin is on each particular market that you're trading.
Fantastic. Diana would like to know, are there emerging tax regulations or legal considerations traders should be aware of regarding spread betting?
Well, it's simply a blanket rule. Spread betting, the way it's classified, is tax-free. So there's nothing we are yet aware of that really comes into that picture. With CFDs, obviously the capital gains tax applies. We see it with spread bets, it's not. So it's simply, you just carry on without any reference to the tax man under current laws.
Question here from Breezy. If I don't interpret this correctly, please just write back into the Q&A and I'll try and find your question. But they've asked, oh, I've lost it, sorry. They've asked, what's the best leverage to trade with? I think that might be a similar question to Elwin's around the margin level. So if that's already been answered, great. If not, please just rephrase and we'll come back to it.
I think that's one we covered. Yeah, we've covered
yeah,
that. Yeah.
Exactly. How can someone transition from casual trading to building a consistent and scalable strategy using spread betting?
Yeah. It's about test and learn, really. You have to be comfortable, as we said, understanding risk management and understanding how markets can move very quickly. It's a very fluid situation. And the emotional side, the psychological element, which I'm sure a lot of people are familiar with as investors, how you can be affected by successful investments and investments that lose money. It's really a case of learning with time what your risk profile is. You have to understand which markets you prefer to trade. A lot of people will pick certain markets and stick with them. and also when you want to trade, what time you want to trade, what time frames you're looking at. Are you going to be a short-term trader? Are you going to be a long-term trader? There's a big perception with spread betting in CFDs that they have to be short-term, that we're looking at 5-minute charts and jumping in and out all day, and that's not necessarily the case, because as we say, we have the types of spread bet, the DFBs, and then the forwards that look at longer term trades. You're not having to run this just over short term. You can run a DFB for much longer than just a month, which is not particularly cost effective. And in similar ways, you can have a forward position on that you plan to hold for, say, a couple of months. But if the price hits your stop, or if your view changes, you can close it out before then, so you're not tied in. It's more about becoming a professional, and consistency is more about, as with anything, is practice. It's easy to place these spread bets and CFDs. It's harder, managing the trades. Markets do things you don't expect. They react in ways that you don't expect and do different things. How they react to any particular data point is very hard to say. Look at Nvidia results tomorrow. The shares might go up for whatever reason. They might go down, even though it looks like good news. So it's the implementation is the much harder element and takes a lot longer. But knowing yourself and knowing your risk profile and your risk tolerance is the most important thing.
Absolutely. That's a great answer. Thank you. A bit of I think I might know the answer to this, but better you ask Chris than me. If spread betting is tax-free, why isn't everyone doing that instead of CFDs?
It's a really good question. It's partly a perception. I think that spread betting is people who don't know what they're doing, and CFDs are for the professionals, because a lot of institutions use CFDs for their own hedging purposes. And it's a sense of, oh, well, I don't want to spread bet because people will lose money spread betting. Roughly the same percentage of people lose money spread betting as CFD trading. It's not everyone wants to use the way the pricing is calculated, the way the bets are done. So you've got that difference between daily funded bets and the forward contract. Some people prefer to say, I'll just use a CFD for the sake of it. It is a very, very small number in the UK of people who have a CFD account and won't use a spread bet account. We even have some people I know of who actually do want to do it and pay the tax on it and say, I'd rather do that as it was my occupation and pay the tax. There are those, they do. I have met a few of them. So there's an element there. But yes, I think it's a very good question of why people don't just immediately go to spread betting.
We've touched on this a bit, but I'll ask it in case there's something we want to add. But what's the easiest way to get started without risking too much?
We talk about risk capital. Always put in no more than you can afford to lose. I think you should look at it as it's the cost of learning about how trading works is your initial money you put in your account. And if it goes well, then fine, but you should be prepared to sort of put a little bit in and maybe lose some of it in trades, because we always think that if you've got 10 trades, you don't know which of those 10 will be successful. And if you do your risk to reward properly, and there's a lot of that in the IG website and the IG Academy, but risk to reward, if you manage that properly, you don't need to win every single trade. But certainly when you're dabbling, when you're getting the hang of how it all works, you should put the money in, and you should probably understand that it might not all come back out again, really. Because you have to learn, really. It's like any skill.
Yeah, absolutely. Josh has asked, how does the risk and payoff of spread betting and CFDs, and I guess we're grouping them for the benefit of this question, compare to option trading?
Well, with spread bets and CFDs, they're directional, obviously. So you're looking at taking advantage of those actual market moves, rather with options, it can be something that you're looking at. You're not so worried about the immediate direction of the asset, particularly. And you can structure them in similar ways. I think the options requires a deeper knowledge, of course, of how the pricing works. The things like delta and Greeks come into it, and knowing what type of options you want to work in order to get the outcome. If you're looking to take advantage of, say, volatility in a price rather than directional movement, is one way with options to do it rather than spread bet. But spread bet CFD is more for those looking to say, I think it's going up, or I think it's going down. I'm going to want to take advantage of that movement fairly easily. And it's true that we do obviously have the options within spread bets. You can do it within the IG platform, or you've got the Tasty Trade element, which you can use instead. But the CFD spread bet side is probably the more simple directional element. That's why it's the more popular product.
Cool. And again, this next one I think we've touched on, but maybe not answered explicitly. Is it possible to hedge a trade using either or a combination of CFDs and spread bets?
Yes, you can. You are able to say, for example, if you're talking about hedging going long and short an asset, you will be paying twice the spread and you'll be paying twice the cost on it because you've got two positions open. And say I'd like to go, we say for example, I'd like to be £5 a point long the FTSE 100, but maybe I'll have £1 a point as a short. Your net position will be 4. So in many ways, you can do it through hedging. You can slightly that very human, understandable desire to overcomplicate things. You're better maybe to simply reduce the position size you have rather than hedging. A very wise trader once said the best hedge is simply to reduce your position size. If you don't know where the market's going to go, don't feel like you have to commit the whole amount of your spread bet. Say you wanted to go £5 a point, but you didn't think you were yet convinced of it. You could say £2 or £2.50. And of course, you can always add to a winning trade over the course of time. If it moves in your favor, you can buy more. So that's one way of doing it, really.
Nice. Thank you very much. Just a final call for questions. We're coming to the end of our time with Chris, and I don't want to leave anyone's question unanswered. So please do add them to the Q&A box and upvote them while there's still time. Raz asks, does spread betting involve more technical analysis or fundamental analysis?
Yeah, I saw this one in the chat, and it's a good question. It can be both. I think there's a lot to be said for using both strategies. A lot of our clients will mostly use technicals because it is obviously price driven. You're looking at the movements. When you've got an IG platform, you have the charts in front of you. There's the charting package that comes with the platform. You can see what's happening. So a lot of it, the technicals will determine the people's view, but I would suggest that you also, particularly with shares, combine it with fundamentals. You don't have to use either in isolation. We've got, I'm a bit of both. I started off as a fundamental investor. I use technicals as well. My view tends to be maybe the fundamentals give you what you want to understand about the company, but the price tells you what the market's thinking about it right now. So I think there's a reason to use both, but I think most people are more using technical analysis and engaging with the charts.
Fair enough. Good answer. Thank you very much. An anonymous question here, but I think perhaps it's worth expanding on. The question is, can I bet on the Dow from the UK? But I think maybe just for clarification, because spread bets are a UK,
Yes. Yeah.
It's a bet on international markets. How does that work?
Yeah, definitely. It's the Dow is one of our top 3 most popular markets. You can bet there's obviously 17,000 markets in the IG platform. You've got indices from all over the globe, the European ones, US, Japanese, Australian, and a host of different FX markets. So and shares listed in the UK, but also around the globe as well. So just because it's a US market, you can still trade the Dow. So yeah, the Dow, DAX, NASDAQ are top 3 markets. Actually, I think certainly indices. Poor old FTSE 100 gets left behind, but the Dow and the DAX are really popular.
We talked a little bit about being a sort of developing a trading strategy, and this question sort of ties into that a little. What kind of record should I keep for spread betting transactions?
Well, obviously, there's a record contained within your account, so you can see what you traded. It's always a good thing, though, really, to keep your own trading journal. Keep a list of what you traded, when you traded it, why you traded it, and the outcome, really. Sort of things of market, where you put your stop, what your position size was, what your target was if you had one, and what happened. And then that gives you can see where you were successful. We have a trade analytics tool within the platform that does a lot of that for you. It can show you what markets you were most successful on trading. So that does help too. But that kind of reviewing what you've done is really useful skill for traders and investors of all kinds to have.
And possibly the last one, just because we're coming up on time, but I think a great opportunity to reiterate a point that we made earlier and maybe glossed over. Are there any markets that one should avoid as an unspoken rule with spread betting, or are most reasonable with proper risk management? And I think an opportunity just to remember to reiterate the golden rule about position sizing.
Yeah, there are markets go through periods of volatility when they move around a lot, when they don't. So I think you need to be aware of that when you are trading any market, whether it's the Dow, whether it's euro dollar or gold or Tesco shares or lean hogs or whatever we have on the platform, and these more esoteric ones. They're all the same in the sense that they have periods of volatile movement and periods of less volatile movement. So using something like average 2 range indicator, which you can find on the platform, will help you to get a sense of, is this market moving around a lot or is it fairly quiet? But as you say, Carl, the position sizing, the risk management is the key thing. The one thing I would say, I run out of time, but one thing I would say is most people put their stocks too close and they underestimate how quickly a market can move. And that's what catches them out. They were right on the direction, but they put their stop too close, or their position size was too large, and they closed out their trade too early, or they took too big a loss. And that's the key thing that most people get wrong, really.
Fantastic. I think a good point to end on. I'm afraid we have run out of time. Chris, thank you so much for your time, for your insights, for walking us through spread betting at a, like, quite frankly, the perfect time given the tax changes. Everyone, don't forget, our biggest event of the year is just 2 weeks away today. You can register for your free ticket. I'm, of course, talking about the Modern Investor Summit. It's a 2-day event over December 3rd and 4th, packed with back-to-back sessions and workshops with some of the biggest name in finance. It's the perfect opportunity to elevate your knowledge, network with fellow retail investors. Valentina will share the ticket link in the chat. It's completely free for you to join. And last thing, as you click off, a pop-up survey will appear on your screen. Please take somewhere between 4 and 6 seconds, depending on how quickly you can click, to let us know how you found the event today and what you want to hear about next. Everybody have a good afternoon, evening. Chris, thank you again, and everyone, we'll see you soon.
Thank you. Bye-bye.
Cheers.